In March, oil spiked 30% in a week. A war in the Middle East, missiles near the Strait of Hormuz, the single most important shipping lane on Earth, the kind of news that moves trillions. And the biggest oil market in the world that day wasn't in Chicago. It wasn't the CME. It was a crypto exchange most people have never heard of. While the New York and Chicago futures pits sat closed for the weekend, more than $1 billion in oil changed hands in a single day on Hyperliquid. Here's the part that should stop you. That wasn't a glitch. That was the market working exactly the way it's about to work for everything. Every market you know has a closing bell. The stock market shuts at 4 p.m. It's closed nights, weekends, holidays. And for 100 years, that was just a fact of life, like gravity. The problem is the world doesn't stop at 4 p.m. Wars don't wait for the opening bell. Earnings leak on a Sunday. President Trump says something insane at midnight. And until very recently, all you could do was sit there, watching a number you couldn't touch, waiting for permission to react. That just ended. And almost nobody has noticed yet. That's the part I want to talk about. I'm going to show you 3 moments from this year where the market that never closes quietly became the real one. The oil shock. The day the S&P 500 itself crossed over. And the moment the people who own the New York Stock Exchange admitted, out loud, that they're scared of it. But to see why it matters, you have to understand what a perpetual actually is, and why for years, a trade like this, leverage, both directions, any hour, lived in one walled-off corner of the market and nowhere else. Here's the simple explanation. A perpetual, a perp, is a contract that tracks the price of a thing. Oil, a stock, a crypto token, an index, whatever. You can go long if you think it goes up, short if you think it goes down. It never expires, so you're never forced out on some quarterly schedule. And it trades every second of every day. That last part is the whole story. Traditional futures have hours. Perps don't. So when something breaks at 3 a.m., the perp is where the price actually moves because it's the only place open. For years, this only existed for crypto. Bitcoin, Ethereum, the usual casino. Then in October 2025, Hyperliquid shipped something quietly radical, a framework called HIP3. In plain English, it let anyone list a perp on anything with a price feed. Oil, gold, silver, the S&P 500, Apple. No listing committee, no exchange deciding what you're allowed to trade. And here's how fast the real world moved in. Within months, 7 of the 10 most traded markets on the platform weren't crypto at all. They were tokenized stocks and commodities. Hear that again. On a crypto exchange, the most active markets are oil and equities. The casino built a door to the real economy, and the real economy walked straight through it. So back to March. War risk in the Strait of Hormuz. The choke point about 1/5 of the world's oil flows through. WTI crude rips more than 30% on the week, the single biggest oil story in years. And it breaks, like these things always do, when the traditional market is closed. A weekend, the CME oil pit, shut. Every real oil trader in the world locked out, staring at a stale price. Except one venue kept trading. Hyperliquid's oil contract did over $1 billion in volume in 24 hours. Briefly, the second most active market on the entire platform, ahead of Ethereum, behind only Bitcoin. One outlet started calling it the market's 24/7 war desk. That's not a crypto story anymore. That's the price of oil being discovered on-chain while Wall Street slept. If oil was the warning shot, this was the line being crossed. In March, S&P Dow Jones Indices, the company that owns the most sacred number in all of finance, the S&P 500, licensed it to trade as a perpetual on Hyperliquid, the first officially blessed S&P 500 perp, trading 24 hours a day, 7 days a week, 365 days a year. Sit with that. The benchmark your entire 401k is measured against, the thing that supposedly only moves Monday to Friday, 9:30 to 4, now has a live price at 2 a.m. on a Sunday. The index that defined market hours just stopped having any. Here's how you know something real is happening. Not when crypto people get excited, when the giants do. The CEO of the company that owns the New York Stock Exchange called Hyperliquid bigger than Nasdaq, and admitted he's been taking meetings with the dozen-odd people who built it. Then those same giants did 2 things at once. They started copying it. The CME flipped its own futures to 24 hours a day in May. And according to Bloomberg, those same giants also quietly leaned on Washington to shut it down. So they're copying it and trying to kill it at the same time. That's not what you do to a fad. It's what you do to a threat. And Hyperliquid isn't hiding either. Its co-founder went to Congress himself this spring to make the case for it. Both sides are fighting like it's the whole ballgame, because it might be. So here's where we actually are. For 100 years, the deal was simple. The market opens when they say it opens. You can buy, you can hold, and if you want to do anything more interesting than that, you need to be rich enough, accredited enough, connected enough to get through the door. Everyone else waits for the bell. That deal is dissolving in real time, not in some white paper about the future of finance. This year. In oil, in the S&P, in the volume numbers the NYSE's own owner is losing sleep over, and the people building the replacement aren't hiding how big they're aiming. Hyperliquid's co-founder Jeff Yan says his mission, in his words, is to house all of finance, not all of crypto. The market that never closes isn't trying to be a corner of the crypto world. It's trying to be the whole thing. And that's the part that's changing for you, specifically. The old market hands you one move and one schedule. Buy and wait for the open. What you could never do is take a real position on your terms the moment it mattered. Long if you see it coming, short if you see through it. On the whole index. Any hour, any direction, in the size that fits you. Not when someone rings a bell. When you decide, the bell was never protecting you. It was just keeping you out.